Do you hate the thought of working past 55 or 60? Do you hate not being able to live the life you deserve today? Do you hate not knowing what your financial future looks like? It's time to stop doing what you hate. Here's your host, Mr. Harold Green.
Hello, everyone. This is Harold Green of Bright Tree Financial Group. It is time to stop doing what you hate. I hope you're having a fantastic day today. Today's going to be July's market minute or July's market update. Just kind of letting you folks know where we are here in the market in the month of July. And I tell you some very interesting things going on. I think no one really knows where the market is going. And there's a big argument right now about whether or not we're in a bull market, a new bull market, or this is just a bear market bounce. So are you ready? 1, 2, 3, let's get it. Now, a little bit of a disclosure. All investments do carry risk of loss before investing. Please do your due diligence because past performance is no indicator of future results. You must sit down with someone to get an understanding of your risk tolerance and your goals and your dreams or whatever it might be before you start investing. Before you make any investment decision, make sure it aligns with everything that you are trying to do. And I would encourage you to get a professional opinion regarding your investment choices versus just watching what you see on TV. And then also, the show is not meant to give you investment advice. And so please do not trade on any information that I give you in this show. All right, so let's get it. Again, very interesting month here in the month of July. The market's been trading up quite a bit. And but the beginning of the month, the market was down, and so no one really knew what was going on. However, there's just a big gap between those who think the market's going to go higher and those who think the market is going to go lower. And so, I think too many people are not invested because they're scared. They bought into the narrative that, hey, this thing is going to have to crash and retest certain lows before it can go high again. Well, what if it doesn't for a long time? What if it doesn't and and you're missing out on a 50% return and then you wait to get back in at the bottom? I don't understand. And so there's a lot of psychological games going on right now with the market. Those that want the market to go down so they can get back in and get in when it's low again. But if you're investing, that's not something you should be paying attention to. What you should be paying attention to is the movers and the shakers and the themes that are out there. And so when I say pay attention, it means do some research, right? Go get some numbers, go look at some charts, look at some patterns, see if you can find a trend, right? A positive trend or a negative trend. This is if you're doing it yourself. But however, if, I'm managing your funds, this is just to kind of give you a snapshot of, where we're at and, what we got going on. Now, I think as of Friday, I believe, when we downloaded our latest options information, right now we've grown our options to about 21.7 million. And we started with about 1.5 million or something like that. So we've had some explosive growth in the options over the last 6 months. And so we've taken profits on that as well. So had I not taken profits, we'd probably be sitting on about $50 million or so. But I've taken a lot of profits, redistributed that money in other places, put some of that money in cash, rolled some of it into some regular stocks, and then basically re-upped on certain options certain stocks when they took a hit. And one of the interesting things that we have in place is what I call a floating floor, which is simply trailing stops. And so anytime an option is up over 200%, what I do is I put a trailing stop on it, and you just have to figure out what the ranges are. If you're up 30, 40, 50%, or 200, 300, 700%, like in some of the cases. And, I look at when the option is going to expire. And then I also look at, okay, how much room do I think we have to run? Has the stock hit its target price yet? Nope. Why not? Because they keep upgrading certain stocks and changing their target prices. Microsoft just got an upgrade the other day, and boy, I tell you, it went through the roof. Some of the options that we're holding in the portfolios went up 50% in one day. And then I do have some very large positions in there now. And they also have the trailing stops or the floating floors on them, so that if they fall below a certain amount, the stocks automatically trigger a sell. The system triggers a sell. The order is there, and it hits that limit. Boom, it's gone, and it's gone to cash. And so that's been very, very helpful when you're dealing with stocks that have great potential, and you buy the options on them. But if you don't put the trailing stop on it, you could be down 60% in a minute, and that's just how volatile these things are. So, if you are playing options in your portfolio, you have to understand that this is not a buy and hold strategy. Options are not buy and hold strategies. These things have to be babysat every day. You got to pay attention to them every day. You got to know when to take your profits every day or let it roll. And so it's a very unique strategy. And so very interesting. Some of the options we have in there, NVIDIA has been a monster. And so, we got back in on those way early in the year. Tesla, we got back in those early in the year. So these guys have just been juggernauts. And like I said, we've taken some profits on those. But moving forward, we kind of really don't know where the market is going to go. And so in the meantime, what we're doing is we're just enjoying the performance of some of these things that we see in them right now. And, we're just kind of buying our time so that when the market does correct and when it does, go backwards, we're in a good spot. We've made some profits and we can take that and sit it on the sideline and then basically wait to get back in. So let's talk about AI. That is a very, very interesting thing that we see right now going on in the market. Everything AI is hot. And so I've been doing some research and talking to some different folks out there about upgrading our software systems. However, what I'm finding is that the adoption for AI into these systems has been slower than what I'd like. It does take a lot of money to ramp up. Some of the things that I'm looking for is certain notifications when clients do certain things, the ability to communicate with massive amounts of clients through their cell phones and different media sources where basically I record information, boom, it gets pushed out to the clients. They can watch me speak right there in their phone or in their car without having to log in. And so we're trying to make it as user-friendly as we possibly can and just kind of have everything right there at your fingertips. And so when I do get that information ready, I'm going to roll it out to my clients and let them know what the steps are. But it's very important. Companies like CRM, Salesforce, they're real big players in the AI space with their client relations managers and things like that. So I'm just really looking forward to how AI can streamline everything that we do and make our lives a lot easier. So that's an investment theme of the future is AI. Companies like Microsoft, companies like NVIDIA, companies like Crowd, do your research on them because, we do need the cybersecurity and then we do need the storage space. And then Amazon Web Services, AWS, that's being looked over a lot. And then if you go and take a look at Amazon stock and see what's going on with it, some of their options are up huge. I mean, it's been huge what's going on with the Amazon theme. Now, I'm not a big fan of Meta or anything like that. So it's moving. If you're in it, that's great. But I've chosen to put monies in other places and not so much invested in them. I don't know if there's really a thing there because they're kind of battling it out with Twitter right now. So I really don't know what that's going to look like. So one of the key things is staying with our core holdings and then adding some around the periphery. And that's been working quite well. There's also this talk about trading out of growth and going back into financials and then going back into industrials. I hear that, but that's kind of like hit or miss. And so what I've been doing is taking advantage of the sector as a whole through like the S&P and then putting some options on the S&P and putting some options on the NASDAQ. So there's ways to play it. And then what we also do is look at some of the biggest players in those indexes and then figuring out which ones to kind of pour monies into or which ones to back off of or take profits. And so right now today, I think there's a bit of profit taking going on. And normally when the market runs up real big, you'll see days where it kind of like, it ebbs and flows and it just kind of meanders a little bit. To me, that's more profit taking or people resetting. Nothing has changed with the fundamentals at all. It's still the story about the Fed. what do we think the Fed's going to do? What do we think the Fed's going to do? At this point, I really don't care what they're going to do. At this point, I'm just kind of like trying to grow the portfolios as best I can and take what I can get while the getting is good. And then if the Fed changes their mind at the end of the year and they start to cut rates, then it's going to have to be because inflation is on the way down drastically. One of the biggest concerns with inflation coming down too fast is that it's just that if it comes down super fast, that means there's problems going on. Okay. There's problems in certain areas that maybe no one's taken a look at. And so we really got to be careful with that and just like, hey, that's why we put our trailing stops in there. That's why we put our limit orders in there, because this thing can change at the drop of a hat and then it can catch you off guard. So it's great to be euphoric and to look at the portfolios and be happy that they're up. But then the question is what is the exit strategy? When do we get off the freeway, right? We got gas in the tank, but sometimes it's there's trouble up ahead and we're just gonna have to get off the road and just kind of wait things out and see. I don't think we're there just yet. We're going to have to wait and get through some more earnings and see what's what. I know Tesla reports today as of June 19th. That's going to be interesting to see where they go. So it could be a great day at the end of the day once the market closes if Tesla reports great numbers. And so if they do run up big tomorrow, you're probably going to see some more profit taking on that. I may even take some profits and then just kind of wait for a 5 to 10% pullback and then jump back in. One of the interesting things about the options is just because the market pulls back real big doesn't mean the options automatically become cheaper right away. And I'm not sure how long it takes for them to reprice the options after a big drop in a particular stock. Sometimes it looks like it happens fast and sometimes it looks like it happens slow. But sometimes it doesn't make sense to take profits when you see it drop like that or whatnot. And then you try to get right back in. Sometimes it doesn't work. So sometimes it just makes sense to hold it through a 10 to 15% drop, because then it can be up 30% the following day and it'll just erase all of that. So it's a very tricky game and you're going to have to pick your entry points and your exit points and then just make sure that you're paying attention to this thing every single day. I don't know about going into industrials or anything like that. That could be a little bit of a head fake. Because, once you saw your growth and you run over there, if that stuff trades range bound or sideways for a while, it's like, why did I do that? And then you're second guessing yourself all the time. So understanding the themes, understanding what's driving certain stocks higher, what's the catalyst that's going to continue to drive them higher, where should you be, where should you not be? Those are the kind of things to watch for. And so Bitcoin right now, it ran up and now it's kind of coming back down a little bit. So I tell my clients all the time, if you're going to get into Bitcoin, it's just for long-term holdings and not something you should be counting on for retirement or anything like that. Because one day it could be a big, and the problem with Bitcoin was the clients who made a lot of money in it before, they got out at the right time. And the ones who held on to it, they lost half, if not more of what they had. So it was just real sick. So pay attention to that and just going to understand why you're holding that kind of stuff. So that's this month's Market Minute. Again, we're probably going to be range bound here soon, which means we're going to trade within a certain range and the market's going to trade sideways. The options do give you the opportunity to take advantage of the big up days. And then, you can just ride with that. So, if it's trading sideways, but you have some holdings that are very volatile, options are good for volatility because on the days that they go up huge, that's when you make your money. And again, you just have to know how to get in and get out. And so if you are managing your own money, you're kind of getting tired of doing it and you want somebody to help you with that and help you and point you in the right direction, I can definitely do that. You just have to click in my show notes and then get on my calendar and let's talk about an investment strategy that works for you. We'll talk fees versus performance and all of that good stuff. Because, again, the biggest hang up for people with having somebody manage their money is, again, fees. And it's one thing to pay somebody 1% and sit in a bunch of mutual funds all day. But like I said before, don't think that you're going to get somebody to trade options in your portfolio and, you're looking for 200, 300, 400% returns and you want to pay them 50 basis points. If you got 30 million, yeah, sure, I'll do that for you all day. But, you got a couple $100,000 and you're looking at, paying $2,000 a year for somebody to put, 4 or 5 hours in. That's, a month. That's a lot that you're asking. So just want you to understand that. And then we can have a conversation about that and how that works. And then you can go from there. So Thanks a lot for allowing me to share today's show with you, July's Market Minute. And until next time, everybody, 1, 2, 3, let's get it.
This is thepodcastfactory.com.